So as deals are reached, whether it's Brexit or the China trade truce or even the GM strike getting closer to resolution, tensions that have been placed on the U.S. economy are easing ever so slightly. So what does that mean for the Fed's next moves? Steve Liesman has some thoughts.
A pause in Federal Reserve rate cuts is increasingly likely, either at the upcoming October meeting or, more likely, after one more cut, according to comments from several Fed officials. What the Fed does will depend critically on upcoming economic data in the next several weeks before that October 29th meeting. Positive developments in trade talks with China and the apparent Brexit breakthrough reported this morning could also argue in favor of a near-term pause. Support for that pause, even one that could happen in October, comes from comments this week from Chicago Fed President Charles Evans, a strong backer of the recent rate cuts. But he said he did not see additional cuts this year. Dallas Fed President Robert Kaplan said yesterday he is, quote, agnostic about additional cuts. And Fed Chairman Jay Powell was careful to say last week that decisions are being made meeting by meeting and that the Fed would only, quote, act as appropriate. The Fed could still cut in October or instead in December if it pauses once. But recent Fed comments suggest the market's pricing of an 83% probability of a rate cut in October, well, that could be too high. Fed officials believe they have already provided considerable economic stimulus in three different forms. First, they backed off planned rate hikes this year. Second, they stopped reducing their balance sheet. And third, they cut rates twice by 25 basis points each time. That stimulus in the pipeline is why many Fed officials insist policy, quote, is in the right place, meaning it may have anticipated current weakness like yesterday's slowdown in consumer spending. But if it hasn't, Fed officials have been clear they will do more. But a pause would give the Fed time to see how existing stimulus in the pipeline will affect the economy. Adding support to the idea of a pause, the Fed is divided over the next move. A pause could give time for the data and developments to clarify what the right interest rate policy is and for the Fed to develop a consensus. For Nightly Business Report, I'm Steve Liesman.